Well, good afternoon, everyone, and welcome to this afternoon's presentation. I'm Stephen Johnson, I'm the Treasurer, and I'd like to welcome those of you who've come to listen to this report about the annual accounts and financial statement. This is a one-off at the moment because this is the first time that we've done this at this time of year. Normally, this happens at the time of the annual meeting, which is, of course, around 23rd of April. But this year we've decided to do it early because, of course, we've changed the financial year and the reporting schedule for the financial year. So we no longer report on the financial year, which goes from September to October, September. We now report on the financial year, which goes from April through to March. And so if I waited until next April to talk to you about the figures of 2012-13, I would be at least a year, if not a year and a month, out of date. So we thought this is probably the best time to do it and to talk to you now about some of the figures. What I'd like to do first, and take this opportunity to do, is to introduce members of the Finance Committee to you, because they are sitting in the room, and we have just finished a Finance Committee meeting. We do meet about 4 times a year, and we've scheduled our meeting today in order to make sure that we have a Finance Committee meeting and that we can come and actually introduce ourselves to you. So I would like to invite members of the Finance Committee to get up and just say a few words about themselves, introduce themselves to you, so you can actually see who the members are. So off we go. Would you like to do an alphabetical order? Jill, you first, then Stephen, and I'll let the rest of you work out the alphabet.
Well, good afternoon, everyone. I'm Jill Andrews. I can't pretend to any investment experience, but having been involved in a number of major infrastructure projects over the years, and also project planning for the Heritage Lottery Fund, I'm very interested in financial management. And having served on council for 3 years, and also having been a fellow auditor, I was very interested to understand exactly how decisions which were made at Finance Committee impacted upon and facilitated the objectives which we want to realise as a society. So having served for a year on the committee, I think I'm just beginning to understand exactly how that meshing of financial decision making and realising our long-term objectives is realised. And so I'm doing my best to contribute to that on your behalf.
Good afternoon, I'm Stephen Dunmore. My background is that once upon a time, long ago, I was an inspector of ancient monuments and historic buildings, which doesn't mean that I have any financial knowledge at all. However, since then, I've been the chief executive of a number of non-defined bodies, chief executive and accounting officer. So I do have, through that, a good deal of experience both with governance and financial management. And I hope on that basis I can make a contribution to the Finance Committee of the Society of Actuaries. Thank you.
Hello, my name is Tristan Gilgarth. I have spent most of my career in the asset management business. I qualified as a chartered accountant and then spent 30 years in the asset management business. You might have asked, what am I doing at the Society of Antiquaries? Well, I've had a lifelong interest in Roman and Greek numismatics, and I continue to hold that.
Martin?
Martin Williams. I've been on council for the usual spell some years ago. I've been a member of the Finance Committee of the Society for in two spells, principally because I was treasurer for about 10 years of the Chelmsford Management Committee. In my outside life, I spent 20 years running a national charity, and I'm now the non-executive director of 2 companies that trade internationally.
Good afternoon. Bob York. My interest is in maritime archaeology, but in my other life, I've been the finance director of a medium-sized property company and a financial consultant. So this is relevant for producing accounts, analysing accounts, looking at forecasts, and all the other things that we get on with on the Finance Committee. I'm pleased to have served with 3 treasurers so far, and Stephen is the latest. Thank you very much.
Thank you very much. So those are the members of the Finance Committee who are here today. They are other than the officers of the Society, they are members of the Finance Committee. They are all fellows, and they haven't said that, but they're all fellows of the Society, so we don't have anyone on the Finance Committee who's not actually part of the fellowship. The other person I'd just like to introduce to you, if you don't know already, is Leslie Faverton, who's sitting behind our committee. Leslie is our finance manager, so if you field tough questions at her, which I can't answer, she will be able to, because she's the person who's pored over all these figures and actually produced them. So, without further ado, I just want to go through the bare bones of the report for you. Obviously, a 40 page or so report is actually quite difficult to deal with in 20 minutes or so, but I do hope to go through some of the bare bones with you. The report was agreed actually on the 29th of October by Council, and the Council have already seen this. It's already published on the website, and if you haven't seen it on the website, it is there. I propose to put a little piece into the next salon about it, so as to draw the attention of people who are on the salon mailing list to the fact that the report exists. There are hard copies of it sitting on the table there if you haven't actually picked one up, and there are a few left, and if you want to pick one up as you go out, or if you need one now, please do go and get one. As I said previously, we're dealing with this now because the financial year has changed. And the financial year has changed, and that means, firstly, two things for this year's report. Firstly, that the annual meeting on the 23rd of April no longer is a sensible time to talk about these finances in a year which will by then be 13 months old. We'll have to find something else, incidentally, for the Treasury to talk about on the 23rd of April, so I hope that you'll bear with me on that. But the second thing is that for this year again, and the figures I'm just about to show you in the presentation here, it means that the figures for this year, which we're reporting on, 2012-13, are for 12 months, and that the figures for the previous year are still 18 months. So what you're comparing when you're looking at 2010 and 2012 is 18 months worth of figures, and what you're looking at this year is 12 months worth of figures. So you've got to get your either 1.5 multiplication table out to go from this year's to last year's, or your 2/3 division table out to go from last year's into this year. So I'm not going to do those sums for you, they'll be on the board. I'm going to focus too this afternoon on the finances. The report, of course, does deal with some of the issues about what we've actually delivered during the course of the year, and I will touch on some of that, but what I'm going to try and focus on most is the finances. The format for the report, which is in front of you, which you can pick up, is actually laid down by the Charity Commission, and it is as we do follow the statement of recommended practice. So the format of the report is something which we have to produce as a charity, and we do make sure that we do fulfil all those obligations as a charity in producing this report. Okay, I'm going to pull out of this some of the key messages now. Off we go. No? What happens next? Sorry.
Just click on it.
Sorry?
Just click on the slide. Not on that, on the slide. Yep. Okay.
Just click on the slide. Sorry,
you have to use the left side.
left side. Okay, so if you've got the report in front of you, the report falls into 4 sections. There's a narrative on the activities of the Society and how through its objectives it's benefited the wider public. And there are pages 1 to 10 on the key outcomes. Financial statement is pages 11 to 15. There's a little piece about the future, pages 16 and 17. And then there's detail, there's a lot of then detail about the organisation and who's the trustees and so on. But then from page 27 to page 43 onwards, there is the financial information. So here we go. The legal structure, the approval by council, fellow auditors in audit report, and the detailed financial information. So what I'm going to try and focus on is those pages 27 to 43, though I will actually come back in due course to looking at some of the outcomes for conservation and some of the other things which we've actually done during the course of the year. So, now the first question I have for you is, can you see the figures on the screen? Because if you can't, perhaps you need to come close to the front. What I've tried to do is to take some figures out of the report and actually highlight them, and I hope that they're visible enough to you all to be seen on the screen. This is optimistically called the bottom line. What it shows is the result for the year. If you look at the result for the year, that's in the pink figure, 976,000 odd, £177,000 worth. You can think of this as a kind of profit. Though it's actually not a real profit, but it is the way in which the society has actually delivered some of its funding during the course of the year. You compare this to the 2012 figures, but remember the multiplier, so it's actually rather a good year compared to last year's multiplier in those terms. Because of the performance in year of the financial markets, and because of the Alpha Fund, which is run for us by our investment managers, Saracens, the amount our investments have actually gained by has been considerable. But this, I'm afraid, is offset by the figure in yellow. That's our snapshot of the deficit that we're actually running on our expenditure during the year, the excess of expenditure over our sort of normal running income. So what you've got to do, in one sense, is to ignore the big figure in blue or the figure in pink, because that's how our investments overall are making us perform. And we've got to look at the figure in yellow, which actually says we've actually spent £133,000 this year more than we actually got in. Now, the next slide, is this a problem? And part of the answer is no, because what we have here presented in the accounts is a snapshot of where we currently stand as of the 31st of March 2013. And it conceals quite a number of factors. For example, Raymond Connolly, when he died 2 or 3 years ago, left us a very generous £270,000. We received that and reported on it in the report for last year, 2010-2012. So it counted in that year as income. But we've decided that we actually want to spend that income over the succeeding 3 or 4 years and pay for our development managers post and the way in which we're trying to develop new funds for the society out of that bequest. So although we count the income in year 1, we're actually spending the income from that counting in years 2, 3 and 4. So in years 2, 3 and 4, that looks like a deficit. And it's not really a deficit because it's planned expenditure. But that's the way in which the accounts actually show that kind of income. We are also using our capital for other purposes, and the Council has decided to do that. For example, our publications obligations, some of the things that we know we want to publish, like our picture catalogue, we were using some of our own capital, which we've stored for many years, on making sure that some of the information about the paintings that we have here in Burlington House is actually put into a wider public domain through the publication of our picture catalogue. We've also done some work on upgrading the property at Kelmscott in order to be able to charge better rent for it. And there's been some upgrading of the IT systems during the course of the year, all of which comes out of capital, not out of ordinary expenditure. So Council has agreed that we should use some of our income for those specific projects. We also allow ourselves, and this is under discussion at the moment by the Finance Committee, we also allow ourselves not just to receive income from our investments, but I showed you the £11 million worth of investments or so which we actually have in Saracens. The income from that actually is paid as dividends, and that earns us something around 3.4–3.5% per year in terms of dividend. And we use that dividend to fund some of the things that we want to do. We count that as running expenditure or running income. But we also allow ourselves to take down from our investments a small amount, 1.5% maximum of our capital, also to fund some of our expenditure. This year, we're reporting on here, 2012-13, we used £112,311, which actually is only just under 1% of our income. We didn't take down the full 1.5% that we allow ourselves, but we do allow ourselves that. And we've got to think about whether that's the right amount to carry on allowing ourselves to take down. But answering the question, is the deficit a problem? Yes, it is in one sense, because we have to ensure that we try to live for normal expenditure purposes within our means, so that our regular income matches our regular expenditure. And one of the things that we want to try to do over the coming years, over the 5-year strategy that we'll be talking about, is that our regular income must start to match our regular expenditure. At the moment, there is a slight deficit. It's not as big as 113,000, which was the figure up there, or 130,000, which was the figure in the first slide. But there is a slight deficit on our running costs, and we want to make sure that we can try to address that issue and make sure that for the next 5 years we're building up within the society a way of dealing with that running deficit in order to make sure that we actually are spending what we get in. apart from special projects and things that we know we want to spend something extra on. So here's the expenditure figures on what we've actually spent the money on. You'll see at the very bottom, it's not actually highlighted, but at the very bottom, the total resources expended in 2013, it's the second column from the right at the bottom, 1.75 million is what we actually spent. That compares to nearly 2.4 million last year, 2.37 million last year. And of course, remember the 2/3, 1/3, 1.5 times multiplication table. And you'll see that we spent, the way in which we spent that money is actually split between conservation, between research, and between dissemination, which are the three main aspects of what we do. Those are the charitable activities, and then there's a cost added on to that, which is the government's cost, £101,000 added in, which makes sure that we're actually making sure that the society is dealing with all of the things it does with very good governance. The balance sheet, the figures are getting smaller, and I apologise for that, but there's a lot to cram on this slide. The balance sheet shows a snapshot of the assets of the society as at the 31st of March. All these tables are actually coming out of the reports. I'm not actually producing something for you which you won't find in the report in due course. It does provide this snapshot. When you look at what the society has in 31st of March 2013 in the group, the first two columns, the society is essentially the society's assets. The group is the group plus Lucerna, which is the group plus the trading company which actually runs the profit and loss account at Kelmscott. There's only about £995 difference between the two, because we actually run a kind of £995 floating fund, if you like, for the Lucerna trading account. So there's very little difference between the two in net terms, but actually what this shows is the way in which those assets are actually split between the fixed assets, the property, the investments, the current assets that we've actually got in hand that we could use, and then the various types of funds. If you look at the bottom four rows, the permanent endowment funds, restricted capital and so on, those are going to show up later in another slide, and I'm going to talk a bit more about exactly how much of those we can use. But those represent primarily the permanent funds that the society has, from which it can actually derive some of its income. There is a figure of net current liabilities shown in blue on the chart here. The £70,000, which actually is a liability, is not, I'm sure, a problem to us, because we do have cash held by our investment managers, which can make sure that we're covering that figure and includes that cash sum within what they've actually got available for us this year. So, our investments. Just note 13 of the report, you'll see the investments show, this is the good news, if you like. As at the 31st of March 2012, our investments were just underneath the blue blob, 10.627 million. This current year they've gone up, and actually if you look at the combined figure, including the cash, is 10.676 million was the 31st of March 2012. That went up to 11.818 million on the 31st of March 2013. I take no credit from this. This is the way in which the markets operate, and this is the way in which the funds held in our investment accounts are actually helping us to make sure that the funds that we have are protected, and that the value of those funds is actually being looked after. You'll see, for example, in one of the figures here, one of the disposal proceeds, 577,152, it's about the fifth one down on the left-hand column. That was some cash which we disposed of, including some disposal of Northern Rock shares, and we were able to gain. Well, we used that funding to gain more resources from elsewhere. So there's some transfer of shares taking place inside here, but actually what this does show is a snapshot, really, as at 31st of March. We did actually invest nearly 172,000, nearly 173,000, the figure just underneath that 577,000 figure. That's new acquisitions, that's more new money which actually is coming in. And you'll see it's much less than it was last year. the last period we reported on was 914,000. That's because the 914,000 included things like that bequest from Roman Colony, included all the bequests and all the additional money we got in. There wasn't so much of that in the last 12 months, but what we did get in, we've actually invested. Okay, transfers between funds. This is what Leslie always calls the more arcane bits of the report. The accounts show some things in the notes which you wouldn't necessarily pick up from the main balance sheet. For example, here's what we did with some money from the Hugh Phillips Fund, which is primarily used for research for publications. But we've actually used that for research and for bicentenary. It's all within the limits of what we can actually use the Hugh Phillips Fund for, but we've actually taken the decision to transfer some of those into other funds in order to use them for other purposes. I don't mean other purposes, I mean the right purpose, but actually to deploy them in different funds. And we've also, for example, gained over the last 2 years quite a bit of money in from the sale of digital sales of the Antiquaries Journal. We went into a publishing deal with Cambridge University Press, and that's actually produced the figures that you see there over the 2 years. And we've actually invested that income. We haven't spent it on just going out and doing things. We've invested that income into restricted capital funds, so that will fund our publications or other publications' work in the future. So net current assets. How much free reserves have we got? And remember I said that I'd show you the table of the different funds. Here are the 4 different types of fund that we actually have: permanent endowment, restricted capital, restricted income, and unrestricted funds. It's the unrestricted funds we're interested in because the permanent endowment, restricted capital, and restricted income funds have all got to be used for certain purposes. And they are tied by purposes which actually are the wish of the donor or tied by the legatee or whatever it is. And they have to be used for those purposes. So we can't just use them on anything. But actually unrestricted funds are much more useful and valuable to the society. So we actually have funds which allow us to funds of 5.8, nearly 5.9 million as at 31st of March, which allow us to use those funds for any purpose we wish to. However, if you look at the left-hand column here, the unrestricted fund, if you look at what that unrestricted fund actually has within it, that 5.87 million is actually made up of £689,000 worth of fixed assets. It's made up of 4.685 of long-term investments. So they're held in order to generate more income. And the only actual liability, the only asset that we've actually got we could use is 497,177 out of that fund. That's the kind of free capital that we've got, if you like. I always find this difficult to understand. I'm sure other people find it difficult to understand as well. But that means that we're not actually as rich as we think we are. We've got a lot of money which is sitting in the bank which we can use for certain purposes. But actually, if we don't use it for those purposes, we can't just use it for anything. So the only amount of money we've actually got, which is free capital, which we could use, is 497,000. People think that the society is well off, and of course it is in many ways, because it does have these assets sitting and used by our sitting and invested for us by our investment managers. But we're not actually as rich as we think, or some people think. So the purple shows exactly what our free available money is. Now, I'm going to quickly go through conservation research and dissemination just to show you some of the things that we've actually done during the course of the year. There is more description of this in the analysis pages of the report, but conservation includes things like thinking about the conservation of paintings, getting the stuff back from the USA because we have it over there on display. It includes work on the collections here at Kelmscott Manor. For grants, we give grants for churches from the Morris Fund, and these count underneath there in the fourth line down, 17,944. Those grants were given to churches this year and were supplemented by a generous donation by Gerald Layton towards that funding. And then the biggest figure down here is actually the support costs that we need to keep Kelmscott Manor running. 294,675 is by far the biggest amount of money we spend on conservation. That includes all the things we do at Kelmscott to make sure it's open to the public and properly managed and maintained. On research, We make other grants. There are some travel grants and other kinds of research grants we make here. This is the one line here that you don't multiply by 1.5. You multiply that by 2, because in 2012 there were two rounds of research grant making. In the last year there was only one round of research grant making. So those figures are not entirely comparable in the same way. We have reduced how much we make available for research grants because Council decided we wanted to use some of that money to make sure we were getting our publications out. And no doubt the research grants money may well become available to a greater extent next year. And I know Dominic Wallace, who's the development manager, is trying to gain some more money in order for us to be able to make our research grants more effective. The two biggest amounts in here are, of course, the library and the support costs to run it. The library had something like 2,200 visitors last year. These are figures all in the report. And another 2,000 inquiries by post and by email. There have been improvements to the online catalogue. There have been scanning of some of the broadsides and making those available. And the library continues to collect a lot of books and donations and manuscripts. There's a report in the text of the report of a gift by 25 fellows of some antiquarian drawings and notes by Charles and Albert Hartson, for example. And dissemination, we do try to make sure that some of our information and some of the things we do are made available to as wide an audience as possible. And this is one of our charitable objectives. Our publications programme is obvious in there. We do make loans to various exhibitions. For example, during the course of last year, we made loans of the Making History exhibition to the United States, but also William Morris Bed from Kelmscott was at Tate Britain for a time. It looked very small in that room. We thought, in such a massive room at Tate, but it was there, and people cooed over it. It's a wonderful object when you see it actually out of the context. We did then 5 objects to the Shakespeare exhibition at the British Museum last year. So we are actively making sure that our material is actually out on loan where it's relevant to specific exhibitions. And there are other issues in there about how we are trying to raise our profile with fellows. The costs of things like salon are included in here. So those are the kinds of costs that we've got in this slide. And then finally, governance. I don't want to say too much about governance, but we do have to make sure that as trustees we maintain good governance. Audit fees, for example, are underneath here. That's under the financial and professional regulation. And those are the kinds of things that we actually do have to pay for. As a charity with serious reserves and serious money, which needs to be properly, we need to make sure that we're properly looking after it. Finally, the support costs. These are not additional. These are all buried in the figures that we've already said. But these are the support costs that we have to undergo to make sure that some of the things that we're doing are actually properly looked after. The support costs are divvied up pro rata between the three main areas of conservation, research and dissemination. Finally, the auditor's opinion. And Kingston Smith, who have been our auditors for some time, they ensure that the statement that we make contains everything it should do and is in line with the financial figures. In the rather curious doublespeak that auditors use, this is unqualified. That means it's really good. Having an unqualified audit is very helpful indeed to us, and that's exactly what Kingston Smith have given us this year. There are no immediate or serious remedial actions required. They did find, as auditors always do, some small misstatements in the accounts or 1 or 2 follow-up actions which they wanted us to follow through, and I think by and large we have done all of those. So that is the end, if you like, of my run through the accounts. I hope that's been helpful to you. I will take questions in a moment. But just to draw your attention to pages 16 and 17 of the report, the future, we're talking about actually having a 5-year plan to secure the long-term future of the finances for the society. We've got a serious issue which we've got to face, which is the renewal of the lease on this building at Burlington House in 2015. That's actually mentioned in the report. We've got to do more work on making the museum collections more accessible and making them available to a wider range of people. We want accreditation, re-accreditation, if you like, for the museum collections that we have both here and at Kelmscott. And we also want to do a number of things at Kelmscott, which are detailed. For example, making sure that the cottages are up to standard so we can get some good rental income from those. We launched the Friends of Kelmscott scheme last year, and that's going great guns. We're looking at cost control at Kelmscott. We're looking at using the property for different kinds of events and functions in order to maximise the amount of income we actually gain out of Kelmscott. So there are a number of things in there which are talking about how we're actually going to use the future for improving on what we're currently doing. I think that brings me to the end, and I'm sorry if I kept you from your tea longer than I needed to, but this is the end of the presentation. If there are any questions, I'll be happy to try and answer them, or Leslie will.